What's up guys, welcome back to another day trading video, and today we're going to go into another retracement tool, another kind of smart money concept, ICT concept that's going to really help you in trading. I personally use it. Other things I've taught, I've kind of used it. I don't think there's one thing I haven't used, to be honest, but that's beside the point. This is a really easy, and it looks complicated but very easy retracement tool, one of the easiest in my opinion. But let's learn into it. And what are we learning? We're learning equilibrium. All right, you probably never heard of it. I never heard of it until like the first time I heard of it. So let's learn equilibrium. All right, first we have to understand what is equilibrium. It's very simple. It's a smart money retracement tool. So it's using smart money. All right, and it's a retracement tool. So when the stock goes back into that retracement tool, that's when we enter long, shorts, whatever, depending on how you use it. And I'm going to break that down right now too. All right, so it's measuring the high and the low and finding the 50% mark. All right, so we have a box. We place it from the high to the low, or the low to the high. Low to the high, and so low to the high for a bullish and high to the low for a bearish. All right, so and then we have to find the 50% mark. All right, for a bullish, focusing on the first two, for a bullish, above the 50% mark is a premium area. So that's where the price is at a premium price. It's at a high price. All right, when it's below 50% mark, it is at a discount price. All right, that when stock goes into that below the 50% mark and into that discount area, that is a discount where the price of that stock is now at a discount. So we want to buy when it's low. All right, so and for a bearish is the opposite. All right, so when price is above the 50% mark, it is at a discount area. So where we're using it as a bearish, all right, when it enters that 50% discount area, that means it is at a discount, because we want to sell when price is high and buy when price is low. And the opposite for a for buying, you want to buy when price is low and sell when price is high. All right, so when it's above, it is at a discount for selling, for bearish. When it's below the 50% mark, it is at a premium price for sellers. It is at a premium price for sellers. And it's very simple. It looks complicated, but I don't think it is. Very simple. So it's opposite. See how it's opposite for bullish and bearish. All right, and it makes sense. Bullish and bearish are opposites of each other. All right, you want to buy when it's high. No, you want to buy when it's low and sell when it's high. You want to sell when it's high and buy when it's low. All right, see how it's opposites. All right, so for all of these, price must enter. Oh, I erased that a little. Price must enter, not wick, not wick. All right, it must not wick. It must enter. And what do I mean by entering? When entering that discount area. What I mean by entering, I mean when there's a 50% area below it. So this is, well, bullish. Yeah. So this whole thing is bullish. When it's when a body is formed inside that discounted area, that's good. That's good. That's when you can use it as a retracement tool. All right. When price wicks, you can see that it just wicks right there, not forming a body below that 50% area. Then that doesn't. That's not. It's not a good retracement tool. It hasn't retraced fully. All right. We want to wait for a confirmation, a 100%, not a 100%, but a good confirmation. All right, telling us strongly that it's going to work, that it's going to retrace. And that's how we trade. That's how you use this. Retrace. That's why it is a retracement tool. We wait for the price to enter, not wick. Forming a body, not wick. All right. And I'm going to show you how this looks, how the how the equilibrium looks on the board. And then, Monday video, I'm going to show you it on the charts. But and I'm going to show you for a bearish. So if we just remove this, put it like this, see, still clean. If stock for a bearish, if stock enters the 50% discounted area, since it's a bearish, and above is the discounted area, if it forms a body, then that is good. If we move this, do this, move this actually. So we can see that it just wicks. Oh, actually we have to do the opposite. So wicks and then body. You can see that it just wicked right there, not forming a body like this did, but only wick. So that is not a good retracement area, and it probably would have gone up because it didn't retrace fully. All right, we need a clear, good retracement. Not gone up, but it wouldn't be a good retracement. We need a good confirmation that this retracement tool is going to work. And how to use that? By it forming a body. All right, so I'm going to show you that. Let me stop wasting time. I'm going to show you equilibrium right now. All right, so let's get into the equilibrium, how exactly it's shown in work. All right, so we have, let's go break this down bit by bit. All right, so we have this downtrend. How is it a downtrend? Easy, by lower highs, and lower lows. All right, because each high is getting lower and lower and lower. All right, we have this low right here, and a new high, a higher high, was formed, breaking structure. All right, from this liquidity sweep, it swept, broke structure. All right, now how do we exactly use the equilibrium? Well, we start from the low, and then we go up to the most recent high. We put our equilibrium starting from the low and then the high. There is a 50% mark, and I'm going to show you how to put that 50% mark into the trading charts. All right, but let's go back to it. We'll put that 50% mark. Once price enters back at this discount area, why? Because discount or sale. Smart money buys into a discount area. That's why once it enters this discount area, it jumps all the way back up where you can easily enter a buy position and gain a profit, whatever. All right. But let's see. Smart money buys in a discount area. You're not gonna buy something when it's at a premium price, when it's at a high price. You're gonna buy something when it comes to a low price. If I see a candy and it's at $1 instead of $1.50, I'm gonna buy it at $1. All right. So when price enters this discounted area, it goes back, it goes all the way up. All right. If this money is only staying, it doesn't. If the price of the stock does not reach the discounted area and only reaches a premium area, then you're not gonna buy because it's at a premium. All right, and the stock might not even go up. It might go up and then come right back down. All right, and you would have thought, hey, because of the liquidity sweep and breaker structure, I'm going to enter in a buy. Let's see what would have happened. Yeah, exactly. You would have not reached your take profit. You would have hit your stop loss right here, or maybe your stop loss right here, with that, whatever, it doesn't matter, and you would have lost. All right, so we have, let me erase this. All right, make this more clear. All right, so we have 50% mark. Above the 50% mark is a premium, and below is a discount. All right, premium meaning smart money doesn't want to buy in this area. All right, it doesn't want to buy because it's at a premium. All right, it's smart money. All right, now let's show you on a bearish. All right, very simple. For using an equilibrium on a bearish, all right, we wait for that liquidity sweep, we wait for that break of structure, then we put it from the high to the low. All right, after the break of structure, so the high and the low. And for a bullish, the bottom will be a discount and the top would be a premium. But for a bullish, since people want to sell at a high price, so when it comes back down, you gain a profit. So when using this for a bearish, you want to have it at the high, the low, and have price enter at that top part where it's a discount, because price is now at a discount because we're selling. You want to sell at a high price and buy at the low. For buying, you want to buy at the low price and sell at the high. But this is bearish, so we wait for stock or price to go back into this discounted area where smart money wants to buy. And you just write it along, put your stop loss, whatever, take profit, and boom, would have won right there. All right, so that is a equilibrium on the board, showed you right there. In tomorrow's video, no, Monday's video, sorry, I'm going to show you exactly how to see this on the chart, how to spot it, and how to use it, and how it, exactly, just how to spot it, all right? So you know how to spot it on the chart, so then you can spot it yourself on the chart as well when trading. All right, but that's it for today's video, guys. Thank you so much for watching. If you like the video, please like, comment, subscribe, and I will see you guys in the next video. Peace.